All right. Good morning, everyone. I had, guess, an issue with my. Let me try that again. Good morning, everyone. I guess I had a bit of an issue with my stream this morning. Good morning, Tanya. Thanks for letting me know that you are here. Um, this is the market forecast for Tuesday, August the 18th. I'm John Hoagland. Thanks for trusting me with your time. Yes, I do have. It looks like I've got some gremlins again. We've got some more people coming in, so it looks like I'm actually out there live, yes, the Gremlins. Good morning, Rick. Good morning, Tanya. Good morning, Level 2. I messed something up on the live stream here, and I'm glad I gave it another attempt here. We've got plenty of time to get through the market forecast. Again, John Hoagland, thanks for trusting me with your time. Market forecast Tuesday, August the 18th. What's going on? Well, we always are going to be looking at these markets in context from the top down. And this morning we've got some interesting things already going on in the markets. We have five of six of our markets offering opening gap opportunities for us. We're going to take a look at those shortly. Now we're always thinking about risk management. So as far as eco numbers are concerned, 7:30 the housing starts numbers came out. Both permits and starts better than expected. That's good news. At 7:55, just a few minutes ago, the Red Book came out, not expected to be impactful. As far as the news is concerned, yes, U.S. stocks are higher again, as retailers like Home Depot and Walmart have beat earnings expectations. Gold pushes back above that 2,000 level mark, and the dollar approaches or is at 2-year lows. Stimulus package is still stalled in Congress, and as the Senate tries to break the deadlock. As far as earnings today are concerned, we know that Home Depot and Walmart are out, also Kohl's. Advanced Auto Parts, and later on, Lazy Boy is due out. Lazy Boy is not due to be that impactful, but it's a nice place to be. Um, so that's about all for the news. Make sure you like, share, comment, question. Feedback is always appreciated, as well as a good heckling, and I think I could probably use a good heckling this morning, it seems. Make sure you subscribe to our YouTube channel so you get notifications when we do go live, even if we are late. VIX, it's pretty much steady, 21.38. Dollar index down slightly, 92.32. Dollar continuing to struggle and drag along the bottom there. Good morning to everybody again. Tanya, Level 2, Rick, Doyle, Bryce, Alan, Fanis, Angel, Roberto, France, Christopher, Miguel, Rick, yes, I do have, I keep having trouble with those nasty gremlins, Rick. Rob T, Troy, Sarah, good morning, Charles, and Ute Gunther. Guten Tag, everyone. I see a possible bunch of some new names there. Welcome to the Market Forecast. If this is your first trip here, thanks for joining me. We're going to take a look into these charts right now. As usual, I always go kind of left to right, and I'm going to start with the daily in crude. We are expecting some news later on today in the API. We're going to have to wait and see how that works out. But here is the daily. I mean, look at since the debacle in the May expiration, it's been pretty much just stair-stepping higher, stair-stepping higher, stair-stepping higher. We're in a bit of a kind of a continuation range type situation here. We're seeing, higher lows. We're seeing higher highs. 43.40 is weekly kickoff high, and it's going to be an important level for us, I think. As we, a couple of weeks ago, we saw an attempt up there, very swiftly rejected, but we're in a different situation now. Remember, this is the October contract. October V is the symbol for October. Obviously, this morning the volume is greater in October. You want to trade the October. You want to trade the October contract, of course. So anyway, the stair step just continues to grind on to the upside. Open interest yesterday, a little bit better volume, but some of this is due to rollover. We had a decrease in open interest. We probably squeezed out some of the late shorts that came into the market, and We have a test of that weekly kickoff high certainly in range for us today. Now, the market really just opening up. Take a look at the 30-minute chart. We have opening range is the dead high of the session. We were going to be suggesting trying to stay patient and looking for better trade location as the day goes on. Obviously, that opening range right at the high of value from yesterday has brought in sellers to the downside. This is a pretty substantial move, almost like something happened as far as news is concerned. However, you don't want to step in front of a freight train like this. You're going to try and be patient or look for opportunities against known levels. Now we've got value low right here. It's kind of lining up with this trend line, which did have three points of contact on it, became supportive yesterday. Another look down to it might be an interesting opportunity for us to look for an execution down at this level. Pretty substantial move here to the downside on that opening, off that opening range. Those opening ranges, that first minute of trade, when buyers or sellers take control of the market right away, it can be a pretty good indication and a pretty good opportunity early in the trading session. We may go back to that crude oil before we finish this forecast to see how things have continued to play out for that. Now, as far as the E-mini S&Ps are concerned, these markets do amazing things. This much talked about 3380 level gets a pretty good test today. The all-time high, 3396.50 from the September contract, is certainly in sight. There is no structure break in the upside auction. Volume still kind of dropping off here, but it's probably because we're more range-bound than directional for the past few days. Looking at, just like the daily volume falling off at higher prices. We did add 3,600 in open interest, so it still seems there is money left to come into this market on the long side. Taking a look at the 30-minute chart here, pretty volatile overnight activity. I mean, we moved this market. The range yesterday wasn't even 9 handles, not even 9 points. Boy, we really usurped that last night, didn't we? So the thing that seems most important to me is we've seen several late opportunities lately to see if the recent high here, okay, not the all-time high yet, but this is our recent high that we just put in the overnight. So we've been seeing this happening. We saw it happen here. It took a day, but the market came back and rechecked that overnight high. These recent highs and all-time highs that occur in overnight sessions tended not to hold during regular trading hour sessions. Maybe not today, but in a coming session soon, we should be back up at this level with a high degree of probability during the regular trading hour session. So it looks like we may or may not open with a gap. The S&Ps, NASDAQ, gold, and both of our currencies that we look at all open with gaps or are about to. So, we opened with a gap yesterday. We couldn't close the gap. We kind of rotated higher and just held there for the rest of the day. Volatile overnight move. If we can't close the gap this morning after the open, if indeed there is a gap, then we have to look for opportunities for continuation to the upside. If we do close the gap, then I'll look for opportunities to buy weakness at better levels at lower prices to find out if we're going to be able to take out this overnight high in the regular trading hour session. So we did leave a gap yesterday as well, so we've got a little bit of weakened structure just below here, but we're going to have to see how this plays out. NASDAQ, I think, is a little higher risk of opening with a gap. Just look at this. I mean, the market is just stepping higher. Open interest, we added 3,400 yesterday, again on lower volume, which is a little bit of concern to me, but again, we are talking about the equities, and they've been eating shorts for 40 years. Structure is okay. We did put in the all-time high in the overnight session again. Volume surprisingly low, but again, that open interest seems to be holding up. Let's take a look at the 30-minute chart. So settlement is here. this is a more substantial gap. Of course, it would be the Nasdaq is a far more volatile instrument, so the gap is more likely to hold the wider it is. Again, we've got the all-time high occurring today in the overnight session, right? Here's the daily, here's the all-time high. We are at the all-time high during the regular trading, during the extended trading hour session. If this holds at some point during the day, it's not going to hold for long. And there's a high probability of that. Nothing happens, nothing is positive or 100% in trading, but it's just a high probability that at some point, if we leave the high of the extended trading hour session at the high today, that it will be revisited in the regular trading hour session. So, and again, we still have the gap left from yesterday. So we've got some possible weakened structure down below here. But when we're talking about the equities, trade what you see, not what you think. Gold. Okay, we had a volume boost yesterday and a push towards weekly kickoff high at 2006. We're above 2006 now. We had an increase in open interest of 3,500 estimated. So we still see money coming into the long side here. Our possible bear flag has now broken away to the upside. So the bear flag is now off, obviously. We are holding above weekly kickoff high. This should be an interesting level if we can get an opportunity to see it there. It should be supportive for us, but we are considerably above that now. So settlement up here. Here's 2006. We've got some overnight longs here. We've also got the weekly kickoff level, resistance here, supportive here. We also have this trend line, which was the upper end of the bear flag that we had forming, and we're now holding above it. So we do have a gap. If we can't close the gap relatively early, I'm not going to fight that. But again, we've got some pretty good reference levels. If we do show some weakness and we want to get into longs on weaknesses, there's some pretty good levels here. This trend line right here, pretty decent. Let's call it around 1450. We've got weekly kickoff low, which is 2006, and then there's all of this information down here. So I'm going to try and stay a little bit patient here. I'm not convinced that we're going to go ballistic to the upside the way we did yesterday. I'm thinking we're going to get better opportunities to look for longs on weakness at some point today. And the 6E. All right. So 1893 weekly kickoff high. It's been tested a couple of times in the past 3 weeks. We are getting directional activity above it now. It was pretty much our high of the session yesterday. Volume continues to fall off here. Now, if we see an increase in volume and participation above here, I'll look at that as possible continuation. The thing that's a little bit concerning is the lack of volume near an important inflection level yesterday, and a loss of only 150 in open interest. So there was not a lot of risk change yesterday. That may change for us today. It looks like we're building up some pretty decent volume on this move above weekly kickoff high today. I don't want to fight this. I want to see what things kind of play out as on the 30-minute chart. This is a potential new leg to the upside. This is a continuation of a market state that started back in July. Directional, range bound. This could be a new leg and a directional move to the upside. Much of that what was I forget what I was going to say. I lost my train of thought. Anyways, here's the 30-minute chart. 1872 and a half settlement. All of the overnight traders long. Are they finding new business to the upside? I'm going to go with yes. Market is open. It's continued to the upside. Excuse me. We are holding that weekly kickoff level as support in the overnight. We're seeing continuation. I don't want to fight this. If I'm going to be looking for a move in the opposite direction, it's probably going to be a pretty short-lived trade. I need to find some structure up here before I do so. Getting an opportunity to see this market back here in this area of consolidation might be an interesting spot. Certainly, I'll be paying attention if we get all the way back down to weekly kickoff high here, which again is 118.93. Okay, let's take a look at the Japanese yen and we'll get down to business. Trying to get us through here. I know I had a late start today and I apologize for that. Okay, I had some bad information at some points here. 9,500 is weekly kickoff high. This 94.50 is a previous weekly kickoff level that still remained on the chart. So 95 is our weekly kickoff high. So we're still largely controlled by short time frame traders. Volume's still kind of weak on the way back up here. It's not really providing great opportunity or participation, but we're nearing an important inflection level at this 9,500 level, and that could change our whole situation. We've been kind of range bound for quite some time here. We took a look above, we failed, back into range. It's another attempt to continue a move to the upside, and as long as the dollar remains weak, there's a higher probability of that. Our short time frame traders are very long this morning. Here is settlement. Okay, we've got a couple of gaps left down here. This is a pretty directional move off that weekly kickoff low. And we've got a lot of longs in this market, and it's up against an inflection level up here. If we get the chance to take a look at an execution up here around this 9,500 level, I will certainly be paying attention. This there's a lot of overnight longs, and take a look at where we are really. I mean, today is Tuesday. This was Monday. This was last Friday. This was last Thursday. This move to the upside began last Friday or Thursday night into Friday. Continuation in the overnight, and then consolidation during the regular trading hour session. There's something unusual about that. I'm not sure what to put my finger on about that, but something a little bit unusual. So again, we're looking for new business. We're looking for buyers to come into this market to continue to pay our short time frame pea shooters that all bought this market last night. Volume is actually pretty decent in the Japanese yen all night. So, I'll be watching weekly kickoff high. If we start taking out the low of this consolidation area, that may scare a lot of the longs that are in this market back towards closing the gap or even towards settlement. And that's what I think about most of that stuff. Hopefully it's going to be helpful for you. As usual, I'm going to take a look and see what we have as far as the questions are concerned. Now, I know I have a level 2 had a question yesterday, and I think he's got it here. Yesterday's forecast. Yeah, you got it right here, level 2, right? Oh, do you guys balance the rollover? The reason I ask is the balance in the futures contracts, the result is my ATM. Maybe you can share your thought on this. It's not something, the ATH is set at 33.82.5. Now, you're talking S&Ps, and it's not in rollover just yet. We've got about 3 weeks before it gets into rollover. As far as rollover is concerned, it's more of a recognition that the motivations of the traders that are trading during rollover is a little bit different, especially the longer term traders. If you're a major player in, let's say, crude oil, and you're rolling over 1,000 contracts from the front month to future months, there's 2 ways you can do that. You can use the spread and try and get your bid or your contracts moved over either on the bid or the offer, which is whatever to your benefit, or you can leg it. Legging is of course higher risk, but you may be able to even take a profit on some of your rollover stuff. So I'm not sure then I'm reading the question right, LT. How do you balance the rollover? I'm not really sure. The reason I ask is I balance the futures contracts as a result of my ATH. Don't have anything to really expound on that, LT, and I apologize. I apologize. It's probably something that I've never really looked at. So maybe you can expound on that a little bit more for all of us. Nobody knows everything, man. I'm always willing to learn more. Good morning, Kevin. Vast West, good morning. Alois, level 2, you want to go back to not back justified data. Oh. Level 2 is if you're looking at continuation charts, if you have information from the current chart, that's the information that I choose to use. Morning, Nick Mo. Yeah, the continuous chart. Yeah, I tend to use the real information if it is possible. All right. Yeah, level 2. I'm glad that you enjoyed that hour with the Dr. Medicare. We're planning on doing some more of that, so we are talking about it and looking to get something set up for us to do another webinar in September. So we'll look forward to that. I appreciate you guys talking about the continuous chart. Right. Okay. If you have information from the current month, that's what I use. If you have to use a continuation chart, all the zones on those charts, from 10 years ago are a little wider. All right. Yoswin, good morning. All right. It's got about 4 minutes here before the equity open. I'm going to take my deep breath, and I hope you take it with me. Apologize for being late this morning and the issues getting into the market forecast. I appreciate all of you being here as usual. If you're new here, hopefully you enjoyed it and found some good information. Dan and JD will be back for the market forecast today at 3 o'clock. I'll be watching, so see how things go. As always, get out there and profit today. Trade what you see. Don't chase trades. Let the trades come to you. If you're out there looking for trades, you're going to find one, and it may not be the ones that you're looking for that are going to be good ones. So take your time. Let the market come to you, and have a great trading day. Trade well. I'll see you tomorrow morning, hopefully on time and ready and raring without these gremlins. And I got them. I'm gonna put them in a cage, and get out there and have a great trading day.